And now to our next conversation. The Federal Executive Council also approved the transaction advisors to facilitate the issuance of a $6.2 billion Eurobond in the international capital market. The institutions include International Bookrunner, JP Morgan, and Citigroup Global Markets Limited, joint lead managers, a Standard Chartered Bank and Goldman Sachs, a Nigerian Bookrunner, Chapel Hill Denham Advisory Services Limited, and financial advisor, FSDH Merchant Bank Limited, international legal advisor, White & Case LLP, and Nigerian legal advisor, Abanwa Nigodalo. The transaction advisors were selected from an open competitive bidding process in line with the Public Procurement Act of 2007. Join us now to look at this as the Head of Portfolio Management at Commercial Partners, Victor Alui. Great to have you on the program. Good morning. Good morning.
Good morning. Thank you for having me. Morning. Thank you for having me.
Great to have you. Well, the federal government has just, appointed, transaction parties to the upcoming Eurobond transaction. Do you think this is timely?
Absolutely. Recall that the federal government was actually going to tap the international debt market early last year through a Eurobond offering, but that was obviously put off as a result of the COVID-19 pandemic. So I think it's been a long time coming, as a matter of fact. So I think the timing is great. The market has been expecting this for quite some time. So yeah, it really remains to be seen, the various modalities of the offering and how things will go.
How do you think the current wave of COVID-19 will impact the pricing?
Well, yeah, there's certainly going to be an impact. I mean, for context, global debt has risen quite significantly through the COVID pandemic. As a matter of fact, global debt now sits at around 356% of GDP. We saw a 35% increase just last year. So clearly, as a result of the economic or the debilitating economic impact of the pandemic, countries and corporates have had to race to tap the debt markets to keep their economies afloat. So obviously, this has, an impact on the pricing. However, the pricing would also be largely determined by, the sort of pricing that we're seeing within the secondary market at the moment. So it's going to obviously be a number of factors: the tenor, the size, the current pricing in the secondary market, the economic outlook, and all of that. So yes, I think that the impact of the pandemic would put some pressure on the sort of pricing that we're likely to see.
All right, but with the surging borrowings in the past few years, are you not concerned, about the sustainability of this?
I mean, I think, debt in itself isn't necessarily a bad thing. If you look at Nigeria, we've got, current debt stock around $87 billion, which is just around slightly higher than 20% of our GDP. I think the concern for us has always been around, revenue. Debt service and revenue, right. So if you look at, between January and June this year, we essentially spent about 98% of revenue generated for debt servicing. So obviously revenue shortfalls are beginning to show up, and that's impacting our ability to continue to service that debt. So I think, revenue just needs to improve and to support our ability to continue to be able to service that debt. So my concern really, from a statistical perspective, would not be around what our debt to GDP is. It would essentially be around the sort of revenues that we're generating to continue to service, the debt that we have. Also, if you look at the Eurobond issuance, Nigeria has Eurobonds outstanding of about 10.6 billion. A country like Ghana has about 14 billion thereabouts. So in terms of sustainability, I don't see any worries. Nigeria redeemed about 500 million worth of Eurobonds early this year. So I think that the capacity is there, for us to take this on.
Now, we can also attribute the significant increase in Naira value of the foreign loans. Why is Nigeria still considering this option, given the implications?
Well, I think the cost is something you obviously want to look at, the cost and also the liquidity. The Eurobond market is very huge. For context, this year alone, we've seen Cameroon come to issue. We've seen Benin Republic come to issue We've seen corporates like ETI also come to issue, and all of these offers have been heavily oversubscribed. So there's decent amount of money there that is actually waiting for a sovereign that is on a stronger footing like Nigeria compared to the rest of the SSA pack, that would help Nigeria tap into, good pricing, in the international debt market. So I think it's a viable option, although I know that the entire 6.1 billion will probably not be raised, certainly not be raised in the Eurobond market, probably half of that, and then the rest will probably be done through some counterpart funding. But I think that the Eurobond market provides a very deep place where the government can actually, raise this money at decent pricing.
All right, if I'll put you on the spot now, what do you think the stop rate will be, given the current environment?
Well, I think that a number of things over the last couple of days have served to play to the advantage of the Naira, right? We heard about the SDR that's coming in later in the month, and obviously this Eurobond issue as well. So all of that would basically serve to boost reserve position and could create a situation where the Naira experiences some sort of appreciation in the near term. As to where the spot rate should be, really that's at this point in time, the jury is out on that. But I think that the Naira is slated to receive some support in the near term.
Now, looking at the current Eurobond market, why have we seen a slowdown in corporate issuance?
Well, I mean, I wouldn't say that there has necessarily been a slowdown in corporate issuance. In October last year, First Bank had an issue, raised about $350 million. February this year, ETI had another offer as well, raised some money as well. So I wouldn't say that there's been a slowdown in corporate issuance. Most of the big Nigerian banks have Eurobonds out there that are maturing between next year and probably 2024. So we're probably going to see maybe a rollover of those or refinancing of that. Seplat also did that, not long ago. So I wouldn't characterize the corporate issuance space as having slowed down. If anything, with the pandemic, I think there's been, decent activity. Maybe not at the level we expect, but I think there's been decent activity there.
All right, so Eurobond is on the CBN ineligible list. How have they been sourcing dollars? And do you think, CBN should supply dollars for investment purposes?
I mean, like you just said, so that is banned, right? But again, you have a huge wall of money in the international markets, that's looking to pick up yield. So my suspicion is that most of this is going to be, offered to international fund managers. And I think that's where most of it is going to be picked up. Yes, local investors that want to be a part of it will have to source their FX autonomously, really.
And then do you foresee an oversubscription of this Eurobond eventually?
Absolutely. I mean, if I were to go by what we saw for Cameroon, what we saw for Benin Republic, I think there's going to be an oversubscription. Suspicion is that we're probably going to be raising anywhere around 3 billion. I think Nigeria could get up to 5 billion of that. So it depends on what the DMO then decides to take. But I definitely think, based on what we've seen with some of the issues we've seen this year, that there will be an oversubscription. Recall that there's quite some money out there looking to pick up yield. So I think there will be an oversubscription of this.
All right. So what's your outlook of the market for the rest of the year?
Are we talking Eurobond market now? Or?
Yes, the Eurobond market.
Okay, well, I mean, the Euro market has been soft over the last couple of months, really. A number of factors continue to plague it. Obviously, we're continuing to monitor the inflation situation in the U.S., continuing to monitor how that 10-year U.S. Treasury moves and what impacts it, really. So over the last couple of months, the market has been a bit tepid. In spite of the ascendancy in crude oil prices, that has failed to really lift, the market. I think a lot would depend on, how the Fed moves in terms of monetary policy. The Fed has continued to reiterate the fact that the inflation we're seeing is transitory and will certainly, wear away. But the market seems to think something else. So it really remains to be seen how, the market reacts to what the Fed does in terms of monetary policy. When the Fed also comes out with guidance in terms of its the tapering of its asset purchase program. So these are factors and things that we continue to monitor to see how they will impact the SSA Eurobond space. So I think between now and the end of the year, we're likely to see the market pick up at some point as yields have actually been traced upwards, quite decently over the last, couple of months.
And of course, looking back here now, how do you think our market will respond to all of this? What's your outlook?
Well, I think that, for the local fixed income market, the fact that we're going to be raising anywhere around 1.2, 1.3 trillion from the international market obviously reduces the need for the DMO to raise debt locally, and that obviously would reduce the anticipated supply and have that positive impact on yields, really. So I think that with the Eurobond issuance, with the SDR that's coming through, with the impact of that on the FX situation, with the impact of that on local fixed income supply, we're likely to see yields decline in the fixed income markets in the near term.
All right, thank you so much. I will have to leave it there now. Victor Aluyi is the head portfolio manager at Commercial Partners. Thank you so much for your time on Business Morning. Enjoy your weekend.
Thank you.